Welcome to RenMac Off Script. We're going to discuss markets, economics, policy, history, and life. The 16th of August, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
As a reminder, the charts that we reference are posted to our Twitter account at RenMac LLC, and go to our RenMac Access page if you're not an institutional account, but still want to stay up with the latest and greatest on what's happening and how we're thinking about the world. RenMacAccess.com is especially for you. I'm going with the Vineyard Vine River Collection today. My wife was the other day. She's like, "What are you going to wear? We're going to a concert." She's like, "What are you going to wear?" I'm like, "You know what I'm going to wear? I'm going to wear something that makes me look like I just got out of the river fishing. That's what I'm going to wear." Like, that's how much I care about what I'm going to look like going to this.
Vineyard Vines, that's pretty high end for your wardrobe, right?
It is the creme de la creme. Yes, the upper echelons, better than the Target jeans and the Costco sweatshirts. Yes. So I'm living it Viva Loco today. Neil, we're going to start with you. There's a lot to talk about from the political side because I want to get into that and the down ballot stuff. But everybody was kind of focused on CPI PPI this week. That was a nothing burger, as they say. Kind of reiterated what I think everybody expected. But retail sales were kind of a blowout yesterday. Obviously, had a big impact on equities. What did you make of retail sales yesterday? And then how would you square that with the housing data today?
Well, I definitely think that, I would go back to the inflation data. I don't know that CPI was a nothing burger. I do think the markets probably did a little bit of front running on the inflation number because, the producer price index came out and it was a little bit better. And so that kind of juiced up the markets heading into the CPI number. And, what we learned in the CPI data is that, when you put it all together, when you take CPI and PPI, you get about 90% of the way to the core PCE estimate, which is the Fed's preferred measure of inflation. That looks like it's going to be up just 1/10%. And I think what's notable is just how quickly some of the rhetoric has changed. Early in the week or over the weekend, Atlanta Fed President Raphael Bostic, I believe, was on the tapes talking about how, maybe he'll support a rate cut by year end. And then, the inflation number comes out and he does an about face and says, yeah, September might be in the cards. And, you see that also from the St. Louis Fed president, I believe. And then, Austin Goolsbee, who's been more on the dovish end of things to begin with. He's sort of talking up the slowing in the labor market. So it really does feel like they were just waiting on inflation for the sake of waiting on inflation. And now that the evidence has become somewhat overwhelming, they're basically, throwing in the towel. There's not really a debate anymore about whether the Fed is cutting. The question is whether they go 50 to start or 25. That's the only thing we're going to be debating at this point. If they go 25 in September, I don't think it negates the possibility of them going at 50 at some point later this year. Now, you asked about retail sales. It's true that retail sales was a knockout. It wasn't really a knockout for the reasons everyone thought, which was Amazon Prime Day. If you look at online retail sales, it wasn't especially strong in July. But I think the bigger story is retail sales were more the exception to the July data flow than the rule. Okay, the employment numbers were softer. The industrial production numbers were generally softer. The housing data was softer. We've seen frankly, an outright collapse in housing units under construction. If you look at single family housing starts, they're down about 15% against last year. Now, a lot of that was a function of what was going on in the South with Hurricane Beryl. But even if you exclude the South, housing starts are still down year over year, and there's probably a little bit more in the pipeline to go because transactions are quite soft. And I think, when you talk about retail sales, you have to have a fundamental rationale for why they rose. And it's hard to come up with one. Income growth is slowing. What we know about the outlook for income growth, given wages, suggests that there's more slowing in income. So if you take the data at face value, it basically means you had a huge drop in the savings rate in July, which means that there might be some payback later. You could make the argument that maybe people stocked up on groceries and shopped at health and personal care stores because of what was going on with the hurricane. Certainly, some of the other data doesn't really comport with other metrics we've been looking at. As an example, you saw an uptick in building material store sales. We saw Home Depot report this week. They did not sound like things were sort of taking off in July. So I mean, you kind of take the data as it comes to you, but generally speaking, I think that the retail sales number was more the exception than the rule in July. And what we know about the outlook, I mean, if you look at August, survey measures of activity that have been released thus far, don't exactly paint a great picture. I mean, home builder sentiment slipped. We saw, generally contraction readings on both the New York Empire and Philly Fed manufacturing for August. So, I mean, I do think we're kind of just waiting on the Fed here. And, I think the debate's really over whether they go 25 or 50. And I think the risk with just stringing out 25s is that you're kind of taking longer than you need to get to neutral. I mean, the Fed has a lot of room, I think, to cut, which is why I think doing more upfront makes sense. But I mean, we'll see. It kind of hinges on the next jobs number, frankly. I think that's a mistake, but it is what it is.
Yeah. Well, our position is the 2-year yield, where it is versus the Fed funds is about 130 basis point spread, which says to us that there is, 125 basis points worth of cuts that the Fed can do by just getting to a normal, R star, if you will, in terms of market rates and policy rates being equal. So, no doubt that from that perspective of that curve, it's the most inverted, by the way, that we've seen since the great financial crisis back in 2008. Obviously, that that really choked off the economy and helped to deepen the recession. But with that, what we're seeing, even though the market has rebounded and, we're now above the 50-day moving average, we haven't taken out the 20-day high that is standing right now at 55.85. The 50-day is at 54.60. We took that out yesterday around those retail sales numbers. But, interestingly enough, when we go through and look again at these symptoms of liquidity, we look at high beta versus low beta. That's now in a downtrend. 50 days crossed through the 200 there. Cyclicals are now underperforming defensives. The IPO index is in a downtrend, not able to hold its trend. Tech and momentum have certainly cracked and losing relative performance, while utilities and REITs are picking up, right? Crypto, both Ethereum and Bitcoin have put in what appear to be top formation. So, all these things are the symptoms of liquidity. Where is the marginal investment dollar, and is that marginal dollar risk on or risk off? And even though the market has rebounded, obviously, very well, very strongly, these things are very consistent with a yen or liquidity drain that's taking place both domestically and globally. So I think that's an important point that is probably being overlooked. In other words, where the market is today doesn't necessarily represent what was driving it or how we got there. Very similar to, or I should say, very distinctly from where we were at the end of June. The other thing I would just point out, and I'd like to get your take on this, Neil, is the 10-year yield. We've had a massive rally out of the S&P. Again, taking back roughly 75% of the decline or so. And the 10-year yield is essentially, testing the lows that we had back, just a week or two ago. So we haven't seen the yields respond in kind to the equity performance. Do you make anything of that?
I mean, I guess then it's just what's driving the market. I mean, earnings expectations are holding up. I think that's part of it, obviously. I just think it's kind of the markets are sort of hypersensitive to data. And, the initial drop in yields was when we had a couple of bad days of data after the last Fed meeting. And since then, the data's generally been better. This morning, we see the, yields coming back down again and stocks getting hit because the housing data were weaker. So I think the markets are sort of highly sensitive to the incoming economic information and what that may or may not imply about future earnings. And so that's sort of how I'm reading it right now.
Are you in the camp that good economic news is good or bad for equities here?
I think it's good because I think the risk is that the markets believe the Fed is behind I mean, that's what set this all off in the first place.
Yeah.
When right? I mean, like the yen carry trade, I know you're putting a little bit more emphasis on that, but I think that's, my own mind is like, I think that's frankly more of a red herring than anything else. If you look at the sort of sequence of events, we had the Fed meeting in July, That was on a Wednesday. The markets were happy about that, actually. If you look at the, sort of the day of the Fed meeting, the markets closed up pretty well. Then you had Thursday, ISM weaker, that we had that initial jobless claims spike, right? And then we had the jobs number. That's what drove the stock market down. It's like the Fed met, didn't do anything.
Yep.
And now by the end of the week, it looks like they should have done something. And so now you're getting all this kind of, they're behind the curve. Then the week later, you sort of had some stability, right? You had some slowing again in initial claims. We had a huge rally on an initial claims number last week,
Yeah,
right?
right.
And so it looks like, okay, this isn't getting away from us. And then you had the retail sales number kind of putting a pin on it, saying, look, the economy's still fine. So I definitely think we're in a mode where good news is good news, bad news is bad news. And if you get weaker data, right, between now and the next FOMC meeting, I think that'll probably pressure stocks. Sure.
Yeah, I would make the case that I think better data is more dangerous right here. In other words, you've got that spread between the between the 2-year yield and the Fed funds, which is already extremely inverted. Anything that pushes off the Fed's desire to lower rates and close that gap, I think risks the hard landing. And that's just historical, right? It just kind of says what's the risk factor of getting to that intersection where the Fed makes a mistake and doesn't act quickly enough. So we'll see. But the divergence between what we're seeing out of short rates and frankly the belly of the curve on the 10-year yields in reaction to this move in equities still belies the fact to us that the structure of this market has changed, and clearly there is more of a defensive tone there. Steve Pavlik, let's talk a little bit about politics here. I think the polls continue to favor, or at least move in favor of Vice President Harris. We have the DNC next week. What are you watching for there? It's going to be a very well scripted event, I imagine, which is right in her wheelhouse, it appears. But what are some of the things that you'll watch for to get a sense as to how strong this candidate's going to be in November?
Well, in terms of next week, if you just look at the sort of the headline speakers, I think Monday's Hillary Clinton and Joe Biden, almost sort of the quote unquote has-beens from the Democratic Party, sort of get that out of the way. Tuesday, you have Barack Obama. He'll be the featured speaker coming back to Chicago. I think there's sort of a theme of working class Wednesday. You have Bill Clinton sort of resurfacing now in an effort to try to appeal to some of these voters, followed by Tim Walz, which I think shows you where the campaign feels they need to make up some ground in these blue wall states, Michigan, Pennsylvania, Wisconsin, that we talk a lot about. And then obviously Thursday, Harris will sort of close out the event. And I'm sort of watching to see whether there's going to be much of a post-convention bump. There's been a lot of enthusiasm, obviously, about Harris at this point. You could see maybe that's already been pulled forward. Recall there's something similar around Trump prior to his convention with the assassination attempt. You saw a lot of enthusiasm amongst Republicans there. So I'm curious whether or not there is a bump in the convention. I'm also sort of watching whether there's going to be some protests that could disrupt the proceedings. Obviously, you want to project sort of unity and energy. And there's talks of sort of the Gaza supporters maybe disrupting things inside the hall. There's talks of maybe immigrants being bussed in from Republican governed states, maybe cause some, concern or disruption outside the hall. So these are things starting to watch, because if those things go on, then there's an opportunity to maybe shift the narrative back potentially to Trump and Republicans more favorable as to, there's a lot of chaos and resurrecting concerns about the border and just division. So that's something that I think would be interesting just to see if those things do occur, what impact they have. But at this point, I'm really watching this September 10th debate. That's the one that's scheduled. It looks like one is likely to come now in October. I don't believe we have the network, although I'd be really surprised if Kamala Harris goes on Fox News, given she's not really talking to reporters yet. So I'd really surprised if that wasn't at NBC at some point in October. We have early voting now in September in many of these states, particularly in Pennsylvania, which is, I think, going to be the most decisive state in the 2024 2024 election here. So I think that's the opportunity for Trump to try to get Harris off the teleprompter and see how she's going to respond to some of her position changes, and just generally, again, be off script, see how she performs. I think the fact that Democrats have limited her ability to do that right now, I think suggests they feel there's some concern there. That said, things have been working for them. She's ahead in the polls. She's ahead in the betting markets now. But to put that in context, I believe just looking at the Real Clear Politics average, Harris right now is now up by 1 point in the average of polls. Hillary Clinton was up by 6.8 points this day in August. And I believe Hillary Clinton was still up over 6% as we got to October of that year. So, I think looking back to 2020, even Biden, who I believe finished 4.5% up in terms of the Real Clear Politics average there, he only won by 45,000 votes in a handful of states. So I think you really need to keep that in the context. Is Harris has gotten to this point. Can she continue the momentum? I'm skeptical of that, but that's the thing to watch next week.
I think you're missing a big point, which is the just affability and of Hillary Clinton. I mean, she's just that person. She's just so charismatic and warm and fuzzy that she should have a bigger lead.
We didn't talk about all the lovely policy proposals that are being put out by
Well,
TD.
that was so we did have a lot of emphasis on the economy. I say that somewhat in jest because look, Trump sort of gave a pre-buttal Wednesday. I don't think he really unveiled anything new. I think the only thing that I really picked up on was maybe this universal tariff. He talked about 10% before, sort of guessed it may go up to 20%. And then in terms of trying to address prices, I know the CPI report was maybe better, but obviously still a concern for voters given the cumulative impact of this over the last 4 years, suggesting that energy independence, expanding fossil fuel production here was a way to lower energy costs and bring prices down beyond that. And then recording this, Friday morning ahead of the Vice President Kamala Harris's economic speech in Raleigh, North Carolina. Again, I think there's going to be more emphasis on generalities than specifics. It's a difficult political needle to thread because she can't really distance herself too much from the Biden economic policies that she's been a part of as the vice president. So to really call for significant changes, I think would be very surprising to me at this point. And then I sort of think, in relation to
That's
that,
hysterical. She had nothing to do with anything Biden has done. A few weeks ago, these people were saying that Biden was the greatest thing since sliced bread, but now she has nothing to do with it. I mean, it's just sort of all I want. I'm just waiting for the statement from 16 Nobel Prize winning economists to tell me that eliminating all medical debt is not going to be inflationary.
right? Just like they
Price
told
gouging
me.
is fine. It's not fine. We're going to put price caps on groceries and food. That's totally fine.
Could
It's
ask
just
Nicholas
like the
Maduro
whole
about
thing is
that.
just so unbelievably, it's just shameless. It's just shameless gaslighting. Like these people really, and when I mean these people, I mean like the people at the commanding heights of like sort of culture, institutions, the media,
Nothing to see here.
the sort of intellectual class. Right, like it's just the amount they clearly hold the intelligence of their fellow citizens in very, very low regard. And if that's not clear to people, I mean, I don't know what to tell you. I mean,
it's 6
literally
minutes in.
last week, JD Vance was talking about a $5,000 child tax credit. This morning, I see the Washington Post reporting that Kamala wants to push a $6,000 tax credit, and now apparently that's the greatest thing.
It's 5-minute abs. No, it doesn't take 7 minutes. We've got 5-minute abs. I mean, it's the same.
Well, I mean, it's just, like I said, I can't wait for the statement from 16 Nobel Prize winning economists talking about how none of this is going to be inflationary. I'm already seeing, we had a weak housing starts number today. I'm already seeing the same usual flunkies talking about, oh, well, now might be a great time to institute a program to, through the federal government in conjunction with state, local, and private sector to generate millions of new homes. How convenient. You want to know how to boost housing supply? Get inflation under control.
Right.
That brings rates down, which then boosts housing supply.
Yes.
Problem solved. It's sort of. unbelievable how shameless people are.
But that invisible hand, Neil, we can't have the invisible
Well, I
hand.
just
It
think
needs to be a white velvet glove that comes in and,
I do think, I mean, look, like, I do think it's a little bit of a issue, just the skew with who controls the institutions and the discourse. There is a problem with that, I think. Anyway.
So let's talk a little bit about down ballot, Steve, but also what was your take, letter grade, on the Elon Musk Trump conversation on X? And are we going to see more of that?
I in I would say probably a C, maybe C plus, in two reasons. One, I thought just the glitch starting 45 minutes late, particularly after we had that delay from the Ron DeSantis rollout. I think a lot of people just tried to tune in and didn't. I also thought it was lengthy, a little too long. I thought, maybe former President Donald Trump should have been a little more concise in his statements, just maybe get through them a little quicker. But that said, I think the idea is probably good for Trump, and that's why you've seen him hold more press conferences recently. It's sort of what Neil was talking about. I don't believe he can count on what he would say a fair account from the press, many of whom have a deep, at this point, I would say, a hatred of Trump. So the idea that he can just speak directly to people and to voters, and I think with Elon Musk, there's a belief amongst the Trump campaign trying to appeal to younger male voters. And you look at somebody like him who's pretty influential with them. To me, that sort of makes sense and sort of gives you a sense just at a micro targeting level where they're focused. So I'd be surprised if they don't do more of that. I'd be surprised if he doesn't try to do more press conferences. Again, trying to draw Harris away from the teleprompter to try to get the media at some point to actually pressure her to face some tough questions. At this point, you can question their complicity here with not really demanding that she do this. I think at some point she's going to have to eventually face some reports. So I suspect they're probably going to be pretty softball and perhaps even scripted. But that's
Right. So has this bump in the polls for Harris, what has it done to the down ballot? I mean, that was going to be a big part of this whole election, and I think the Democrats' big concern was obviously the risk of the Senate and even more galvanization of the House. Where does that stand now?
Right. I mean, that's sort of what's been reported, that House Speaker, former House Speaker Nancy Pelosi sort of came to Biden, so you're going to put all of us at risk here and deliver the Republican sweep. I think with Harris, in terms of her better standing in terms of the approval rating and polling from Biden, I think you've seen a lot of just disenfranchised and depressed Democrats return. And that's where we've seen the poll, and that's good for these down ballot Democrats. In terms of the Senate map, it's very daunting for Democrats. I mean, it was always going to be that way. I think, we look at West Virginia, that's presumably already gone to Republicans. So you're working off a 50-50 baseline here for the Senate. It's still going to be difficult for Democrats to hold on to Montana. And it's also going to be difficult for them to hold on to Ohio, even if Trump doesn't win the presidency. If he performs well in those states, it's going to be very difficult for those two incumbents. That said, I think some of the marginal Democrats, more in the lean Democrat ratings at this point, those from Michigan, Pennsylvania, Nevada, Arizona, I think they feel better now about their chances with Harris at the top of the ticket. And look, there's surprises that happened. So at least gives them the possibility and hope for maybe retaining the Senate there. In terms of the House, I haven't seen many significant ratings changes. That's probably because we have very few competitive seats. There's roughly about 20 evenly split between the two parties. I think in terms of the states that could actually decide control of the House, California and New York, they tend to not be competitive at the presidential level. And if Harris can perform well there, that probably bodes well for Democrats. Hopes of maybe winning back the House. I think whoever wins the presidency is probably that party's going to win the House, just given what we've seen historically, and because we have these small margins and because we've got a lot of gerrymandered districts. But I think that's sort of where I would look at the down ballot impact right now.
Got it. Neil, what's on the docket next week?
So next week we get the FOMC minutes. I mean, normally I don't pay much attention to the minutes because they're sort of stale. But it'll be interesting to see because Powell did talk about how they were discussing rate cuts as early as July. I mean, he sort of mentioned that at the meeting in the press conference. So I'm curious to see how that conversation was written about in the minutes. We also get home sales data, both new and existing home sales. What we know about transactions suggests, very, very sluggish growth, both in existing and new home sales. If you look at mortgage demand, loan applications for refinancings have exploded, which is what you'd expect to see given the decline in rates. What you haven't seen, however, is any uptick in loan applications for purchase, which suggests that housing home sales are still quite sluggish. Transaction demand remains weak. And I think that sort of speaks to this idea about, even though mortgage rates are about as low today as they were last spring, inflation is a lot lower today than it was last spring. So a 6.5% mortgage, people are not stupid, right? If you have a 4.5% inflation rate and 6.5% mortgages, that looks like a pretty good deal, right? But if you have 2% inflation and 6.5% mortgage rate, not so much of a good deal. It sort of just speaks to this idea that real rates are still very elevated, and I think that's kind of weighing on housing demand. And then we'll also get finally data on services, composite manufacturing PMIs, and the likes. And we got Jay Powell at Jackson Hole, Wyoming next week. Look for him to talk about how the risks between growth and inflation have moved into balance. In my view, they've moved a little bit further away from balance. There's clearly a higher risk of rising unemployment than rising inflation at this point. We'll see what he says about that. He's not going to kind of settle the debate around 25 or 50, but I do think he's going to sort of sound a little bit more cautious on growth, which should be seen as a signal that they're ready to act.
Think he has a cowboy hat?
He might. Who knows?
Not one that's broken in.
Right.
But I do think that's just to remind everyone, we do have that on Friday. That's coming out at 10 o'clock. So next
Got
week.
it.
So I'll be keeping an eye on those as well.
Great. Steve, anything in DC other than the DNC?
I really think the DNC is going to be the big thing to watch next week. I think just looking back to this week, getting more information here on this drug price negotiation. Really got the 10 drugs that were listed there. Again, that's not going to actually take effect until 2026. But if you look at the savings, it may be a little overstated. One, they're using the list price. That's obviously a lot higher than what most people actually pay. And too many of these drugs are scheduled to come off patent, I believe, pretty soon. So it shouldn't be surprising that the political spin makes things out to be better than it is. But just sort of keeping an eye on, will this even move forward? You still have a lot of these drug companies challenging the legality of this. So I just think it's going to be something that obviously the Biden and Harris administration has emphasized right now. And I think you're probably going to hear more about it in the weeks and months ahead.
All right. Well, from a market's perspective, 55.85 is the 20-day high. That is the resumption of an uptrend, the way that we do our magic over here. 50-day moving average, 54.60, probably has some support, but I think the real support level that you have to look at is now the 65-day low. That's 51.19. So any retest should be really encapsulated by that 51.19 level on the S&P. 10-year yields, look, they got to our target of 380. That happened about 6 months ahead of what we thought it might. But that is now support. That always was support, but it was reinforced with that reversal. Resistance right here, 403 on the 10-year yield, and then 415 if we get through that. But still within this looming top formation in overall yields. And just because the market's back in trend, just because, we go on to make a potential new high, I would just reiterate that the characterization of this market, the structure of this market has shifted, and it is no longer dominated by tech, dominated by momentum, dominated by cyclicality or beta. There are some cracks and fissures there, and look no further than the cryptos to see some of that. Ethereum with a big top overhead and potentially a top in Bitcoin with key support there at 50,000. Join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter and LinkedIn. And again, if you want insights and you're not an institutional client, join us at renmacaccess.com. Until then, I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
We'll see you.